Hey everybody, it's Saturday, October 3rd. Let's do our weekly update on the market just to give you a feel for what's going on out there in the world of financials. I'm looking at the SPDRs, which is the exchange traded fund for the Standard & Poor 500. It's a very good gauge of market activity. And what I want to show you here is some interesting things that we're seeing on the market. Some people are feeling pretty bullish on the market, and we do have a little bit of a bullish uptrend. And you can see where Friday's price action came down into that bullish upward trend, and there has been some buying. We have also noticed that we're seeing a few things that might make us think, oh, I don't know. That lower high and these series of lower lows and lower highs could be indicative of the beginning of a downward leg, which we have been talking about potentially anticipating here for quite some time. There is one thing that I've noticed that is very interesting about the volume associated with this price chart, and I'm going to grab a little drawing utensil here. And what I'm going to show you is down here we're looking at volume. And the volume posts the average number of shares, and it posts the number of shares reported for that day. We have the black line here is a moving average, and what this would help us know is if the volume for the posted date was above average or below average. And what you'll notice here is that these above average volume periods are associated with downward movement in price. So we're seeing downward legs on above average volume. And even out here, above average volume, we see prices move down. Now that is indicative of inventory being dumped into the market. And when we're talking about inventory, we're talking about people dumping shares of the stocks and the indexes that they're holding in. And the reason we know that there's a large number of sellers dumping shares is because prices move down. Now, volume tracks a transaction, which is every buyer and every seller. There has to be one of each. So what volume basically tracks is the number of transactions that have taken place. And we know that this above average volume and the downward movement in price is the market being flooded with available inventory. And that would most likely indicate institutional selling, meaning the institutions are starting to leg out of positions, offering up their shares to the highest bidder, and prices have come down because of the large availability of shares. So we are seeing that potential rollover. Now, I'm going to go ahead and we'll go ahead and remove those lines. And let's take it from a daily perspective out to a weekly perspective and remind you all that the market has been in a primary downtrend. And the market is approaching a general trend ballpark. Now that's a subjective little line that I've drawn right there because I'm the one who drew it. And when you do draw trend studies, I suggest that you make them fat like a zip code and just talk about this as a potential area for selling pressure. Some people who have bullish postures might feel that these strong motive waves up and small corrective waves down tell us that the buyers are in control, that the bulls are running this market. However, it just depends on your perspective, your time frame, and your bias. There is another way to look at this market. We could actually go ahead and drop back out to, say, a monthly chart. And to many, this is a trading pattern known as a bearish retracement, which is based off of strong motive wave down, corrective waves up, very strong motive waves down, and corrective waves up. And in that trend zone is where you'll see some selling occur. And we do see that we have a bearish candlestick here for the last month or so, meaning prices are stagnating. And that's called a bearish Harami. The decreasing volume tells us that overall market participation is waning, but that's off of these all-time highs from last year's big market meltdown. So take that with a grain of salt. There was some fantastic news on Friday. I'll go ahead and open that up here. Not fantastic in any way, shape, or form, but really what we're talking about is just big economic reports. the non-farms payroll report, or the jobs report, comes out the first Friday of every month. And I'm using a little Yahoo calendar here to find that. This non-farms payroll report and unemployment rate are big news items for the market. And let's just focus on the unemployment rate right now. And these numbers, let me show you what they stand for. Up here we are looking at prior, market expects, the briefing forecast, and then the actual number. So as we drop down and look at that jobs report, last time we had 9.7% unemployment. The forecast, or the market expectation, was 9.8. The briefing update was an estimated 9.9, and the actual number came in a little bit lower than the update, exactly on forecast at 9.8% unemployment, which is being received as possibly good news because it's not as bad as we thought it was, or potentially it's bad news because it's grown from 9.7% to 9.8%. The market really hasn't made a strong opinion. The only thing that we do know is that on Friday, when this news came out, the market did hold its ground in this little tiny trend zone and this old support resistance neighborhood, kind of in that ballpark right there, where there was some buying. Now that buying might have been the bearish short sellers who made money during the week simply buying to cover, to close out their positions, or it might be the beginning of another bullish leg up. My suspicion is that we'll see a couple of days of bullish activity and the market will make up its mind as prices come up into this neighborhood out here where old support could become new resistance, or that trend zone kind of comes out here. We're going to see if the market's going to put in lower highs or lower lows. I don't know that we have a lot of decision making here. Now let's take a look at another piece of information here. Some interesting news. Brazil has been awarded the Olympics, and I wanted to show you how news can affect the level of trading. Now, that should be a huge windfall for general production and industry in Brazil as they prepare to host the world. And what you can see here is that this exchange traded fund, this is the ProShares, or excuse me, the iShares exchange traded fund for the emerging market Brazil. We can see that it's in a primary upward trend, and on the news we see a strong buy candle and double the average daily volume. So a large amount of volume and upward movement in price would probably indicate that the available inventory, or shares outstanding, has just been purchased up. And anybody who wanted to get in on the news just bought in, and anybody who's thinking about getting in the following days and weeks is probably going to have to pay more because the available inventory has just been dried up. So prices are likely to run up, and we could see a little bit of an upward movement in price on that exchange traded fund. Just to give you an idea of some tools and techniques that you can use to identify trading opportunities. Well, that should do it for today. Let's go ahead and call it a market recap.